Welcome, everybody, to another episode of the Everyday Trader. It's been a few days since we've talked to you, but it's good to be back in front of the camera and talking about the market today. And just spent a few minutes talking to Eric Hale. Good to have you here, Eric.
Good to be here.
You survived Iowa.
Iowa's flat as a waffle. It's 461 miles in 7 days and 17,500 feet of vertical elevation. It's constant rolling hills. So it was a good time. I had a blast. I rode fairly fast and didn't have any injuries. So yeah, I'm still physically recovering. It was I burned 25,500 calories. My app keeps track of how many calories. So I ate a lot of pie. Pie and
There you
pickles,
go.
believe it or not. That was pie, pickles, and ice cream every day I pretty much had. Believe it or not, the pickles are a health food. They're very high in potassium. They have probiotics in them, and they can prevent cramping.
Yeah. Yeah. No, that's one of the things I would always do before football games is down some pickles back in the day. Back when my body liked football. I don't know that football might hurt today.
My body hurts all the time.
Well, the market hurts today.
Oh, yes, the market is crazy.
So there's interesting things going on. A lot of potential different things moving the market right now. And I know you put together a slide, so I'm going to let you kind of take the lead on this. But before you throw that in there, I think it's interesting to note if you would have told me a month ago that Nvidia would be down 30% in a month, because that's where it's at. Nvidia is just absolutely getting its head ripped off in the last 30 days. And the S&P is only down 3%, 3.5% from its highs. There's no way I would have believed that was even possible. But it's happening. There's a lot of rotation out of big tech still. Tech is taking it much harder than the rest of the market, although today it's kind of everything. Pretty defensive move today, but turning it over, let's kind of go through those bullet points that you had talked about. I don't want to steal thunder from you because I know let's talk about each one of those in turn of what it could be that's moving the market to the downside right now.
Yeah.
Really for the last couple of weeks.
So you did hit on an important thing that the S&P 500 is not down as much as the Magnificent Seven. We can take a look at that heat map. Am I still sharing my screen? Yeah, I'm sharing my screen.
Yeah, there you go.
I mean, this is today's sector heat map, and we've got some blood in the market, but then some very bright green places in the market as well. This is, of course, one day doesn't make a trend, but looking over a week, still we got some what I would call dichotomy, and that everything's not trading in the same direction. This does look like a little bit of a flight to safety. If the green areas that stick out, well, first of all, Meta had great earnings, so they're not going with the rest of the tech. But healthcare is doing well. We've got real estate doing well. We've got utilities doing well. To me, that probably is more of a reflection of the Fed sentiment on the Fed. If we look at September's meeting, the odds are based on the CME. Excuse me. If you based on the CME, I might need to take that call real quick. Let me pause this recording because that might be my doctor.
Yep, you're good.
Hello? Huh. Which is weird. It's not in my recents. Hmm. Okay. Well, let me double check and make sure I'm not screwed up on my doctor's appointment at an hour off. Uh, That would suck because it took me months to get this appointment. Okay, no, we're good. All right, all right. Am I still recording? Oh no, I think I'm still recording that. Oh well, we might have to figure out how to edit that. So I don't think I stopped recording. So I apologize for those of you that saw me go through that there. So where were we? We were on the FedWatch tool here, and this is September. So the current we're at 525, 550 right now. So this is showing 100% probability of a rate cut and a 20% probability of a 50-point basis cut. So I think when we look at the sectors, you look at areas that will tend to do well, especially real estate and utilities when interest rates go down. So maybe we've got a confluence of things that are happening right now. There's a checklist that we sort of go through. We try to diagnose what's happening in the markets. And this is a very volatile week because we've got a lot of stuff happening. We got a month end, which sometimes months cause rotations. We've got economic news. So one of the big things that came out this morning was economics, and the ISM report that came out this morning was terrible. It's the worst that it's been since October 23, I think is the number here. But a number less than 50 on ISM indicates that we've got contraction in the market. And looking at these numbers, you can see we had back in I guess April, we peaked above the 50 line, but it's been trending below the 50 line for quite a while. And so this print that we got here today, along with some of the commentary, this ISM survey, they have commentary from the people who are part of the surveys talking about new orders dropping and new export orders dropping, backlog orders remaining strong, contraction territory. So that's kind of a double negative. I started reading strong, but it's strong contraction. That's negative. Customer inventories are lower. And then there's discussion in here about reduction in CapEx spending. So this ISM number, but here's what's amazing to me is this sort of surprised me. And this is one of the things that I presented a slide on. This is a chart from Goldman Sachs.
Yeah.
That did some research a few months ago about economic reports in the events. And number one was output per hour, which was productivity. And we got a productivity number today that was 2.3%. The consensus that's within the consensus range, but the forecast was 1.9. So we're above we're within the range of consensus, but above the estimate or the median. So it's a significant increase in productivity, which I'm not exactly sure why that would move the market negatively. I think an increase in productivity is generally seen as good. But this ISM here, you can see in terms of absolute impact on the markets, ISM is number 2. Now, what I'm going to do is I'm going to copy and paste these in order in the notes of this YouTube video. So I'll copy and paste this section so you can know for those of you that are watching, when you see the economic calendar coming up and you want to know what's most important. So maybe you want to go back and take a screenshot of this page here and take a look at these. This is an average day within no events. And we can see, what's on the top, and FOMC meeting and non-farm payrolls. If you ask me, I think if I asked you too, you'd probably bet those are number 1 and 2, but believe it or not, it's this productivity number and ISM that have the biggest impact on the markets. This is from 2010 through 24. So pretty significant. So we saw that today, economic reports. We do have earnings that are coming out, which are mixed all over the place. Meta was great. As you mentioned, Micron is just getting absolutely pummeled.
Yeah, Micron's almost back down into the double-digit territory. It's been above $100 a share since mid-March. And yeah, with the rest of the semiconductor index, I mean, yeah, semis are just getting absolutely slammed. Even though yesterday we got a really good earnings report from AMD and had a really good bounce from the rest of the semiconductor sector yesterday. I mean, it had a huge short covering rallying on a lot of these names, and they've given it all back. I mean, AMD's a perfect example. I mean, pre-earnings, they were at 138, 137. Their earnings, they gapped up to 150, and then they've given it all back. They're back at one. They're actually below the price where they were, 2 days ago, prior to the again really solid earnings report. And to me, that's a statement of these stocks have come so far over this year, that it's now there's some form of uncertainty that's been introduced into the market over the last week, to be honest, the last 2 weeks, that's caused some rotation out of big tech, some fear, some uncertainty into what the future of the market and the future of the economy is, and whether that's Fed related, like we've talked a little bit about, and the Fed's 100% certainty now that they're going to move in September. At least that's what the Chicago Merc is pricing in. I don't know if I'm in 100% camp there, because we still have a decent job market, but it is looking more and more like inflation has tamed the last several inflation reports that have come out. But it might also be politics. I know there's been some big shift in the last couple of weeks. And as much as I, in most cases, believe that the market doesn't really care who the president is, they don't care if it's a Republican, they don't care if it's a Democrat. I don't think there's an impact there. What the market does care about is certainty and the ability to forecast the future. And we definitely have not had that. Even though you and I have talked even just a couple months ago when it was President Biden and former President Donald Trump, regardless of which of those two candidates won, we kind of knew what their policies were going to be. And so, to be honest, I think that's why the market didn't care and hasn't had a lot of volatility. That's obviously changed in the last couple of weeks. And we're seeing some shifting going on. I know you've got a really gross slide you want to show right here.
Yeah, so let's talk about politics, and just to make sure everybody's clear, the origin of the word politics begins with the Latin term poly, which means many, and the second part of the word is ticks, which are blood-sucking parasites.
Like I said, really gross slide.
Which one? The one on the left or the right?
Yes.
So this you said the past week, but it's not even the past week, it's the past day. So the blue line are the odds of a Democrat winning, and the red lines are Donald Trump shooting himself in the foot because he can't keep his mouth shut. So I don't care which side of the politics you're on. What we do believe, just to add a little bit of color, we are both still in the camp, I think, that either candidate could be okay. It's uncertainty that matters the most, and there's likely to be different sectors that are impacted. This is a cheat sheet that Citi published, focused on the retail sector and just looking at retail companies, who's more likely to do well. And it says Biden or Trump, but I guess we can probably presume that Kamala Harris's agenda would be pretty similar, depending on if you break it down into the major issues which are on the table here. We got corporate tax, tariffs, labor and wage, immigration, and then cannabis. Which candidate would have a more positive impact? So certainly, I use people get uncomfortable with this sort of discussion, and I just say, listen, imagine that you're a company that makes AR-15s, okay, and you're deciding whether or not you should build a new factory. You probably would wait until you knew who the president is, and that's a pretty clear argument. I think most people agree, but it does play out in terms of I've worked for publicly traded companies, and I know that policy matters, and I've heard it where they've said, we're going to wait until we get more clarity on what the policy is going to be. We're going to wait until after the election before we make some decisions on things. I've been part of those discussions, so I think this is just looking at some of the particular companies, and the point probably here is not for you to take a bet, but just to recognize that there's going to be the sector rotation. And Greg started off talking about, we've seen this massive decline, 30% down in Nvidia, but the S&P 500 is essentially flat So that tells me that money is going someplace else. So the money is going out of tech and going someplace else. So this sector rotation is what we've said we've expected. And overall, I think the market is going to do fine. This week, we've got just a preponderance of volatility because we've got everything going on. We got a month end. We've got drama in the election. We've got the most significant, but going back to this slide here, the most, or I guess ahead here, the most significant economic reports in terms of impacting the market happened today. I mean, it surprises a lot of people that ISM and productivity output per hour are number one and number two, but those two reports came out today and they were surprises. And it's not, is it good or bad? Often surprises are bad. So it's all about uncertainty. There's major uncertainty about economics. We've got earnings going on. So we're seeing a lot of volatility here. I think there's opportunities and there's ways to approach it. Maybe we get a little bit more specific. You were telling me about a trade you were doing earlier. What were you what was the trade?
My trade on Nvidia. Yeah, no, I've got a stock that's had a bad couple of weeks, and it was initially a bearish trade. It was a bear call, and Nvidia shot up through my strikes, and I adjusted it and turned it into basically a covered call where I bought shares of Nvidia at 138. And Nvidia is now at, sorry, not 138, 128. Maybe it was 138. No, it was 128.
Okay. But you're making money, you're
No,
making.
I'm positive. The stock's down below 110 now. Stock's at while we're currently speaking, it's at 108.
108.69, yeah.
And yeah, no, I bought it at 128 because it had pushed up through there. Went up as high as 134. I was going to be happy selling it at 128 because I was going to make money. And then it recently dropped as low as 103 just a few days ago, gained it all back yesterday, and now is giving most of it back today. But because I've made some adjustments, and that's what we focus on. For those of you who watch us and are not part of Options Animal yet, that's really what our core of teaching people how to do, is make these types of adjustments so that I don't have to feel like I have to perfectly time buying and selling. I can still believe in a company like Nvidia and say, okay, I do see that they're changing things. I can take a position in it and not worry that, oh, inevitably my timing is I'm going to buy it at the top and then have it drop 30% like it just did over the last couple of weeks. And I'm okay on it. So I put it into a collar trade. And that's, to me, this going forward, arguably for the remainder of this year, maybe even into the first half of next year, when we start to see some of these liquidity measures burn off that have been kind of holding the markets up, I think the collar trade is an imperative type of strategy to really understand how to use in today's market. Otherwise, days like today cause you a huge amount of angst and panic. I mean,
Yeah,
S&P's down 2% and you're freaking out.
yeah, I want to share just real quick here is this is actually, I just set this up with Apple. You could go buy Apple right now. Okay, go buy Apple shares. And this is, I don't know if you're familiar with the risk profiles. I know you are, Greg, but the people watching and listening may not be familiar with the risk profile. So a risk profile, the stock price is on the horizontal axis and my P&L is on the graph. And if you see the current stock price, Apple's trading at 217.88. What this is showing me is if Apple goes really high, I can make $737. If it goes down, I can make 409. I just don't want Apple to stay stagnant. So as long as Apple moves, I can. This is one example of a collar trade. There's different approaches to a collar trade, but this is kind of the vanilla sort of starting point with a collar trade. And what it shows is you just want Apple to move. So as long as Apple goes up or down, which is a pretty good guarantee, Apple's going to make an explosive move here over earnings, and it tends to go higher. So this one's biased a little bit bullishly. Now you may give something up, so maybe I don't make a ton of money. But if you're just a shareholder, you've got this potential to to lose thousands. And yes, you've got a potential to make thousands too, but you've got a lot of risk. And this is the sort of approach at Options Animal we teach. And you can use the tools at Trader Oasis to be able to see this. And this is what allows you to be, level-headed and calm. I think of the Rudyard Kipling poem, which if you can keep your heads when everybody else is losing theirs, and it certainly feels like people are losing their heads in the market. When you put yourself in a trade like this, you're kind of like Zen master, where you don't really care as long as the market, as long as it moves. And even if it doesn't move, I'll still be okay. And there's always a sacrifice. You're going to give something up for being in a trade like this. You give up some upside, but in exchange for not literally making money if the stock goes down. And that's the kind of trade you're in right now with Nvidia. I know that, okay, fine. I'd rather it go up, but it's okay if it goes down. This is different than what a lot of people are doing with, and there's a lot of people who are interested in 0-day options and doing, some, naked strategies. This is kind of boring. It's not for everybody. It tends to be for, what I would call the more mature, low risk sort of trader that's out there. Maybe somebody who has acquired some serious worth and looking to protect their assets. That's our niche right there. Not the crazy people that are doing naked options and 0-day options. It's not for me. I don't know about you, but
No thanks. I've been there, done that, got the t-shirt. Right.
it's interesting stuff to watch. It's like watching the Kardashians or a car accident. You see it, you gotta, oh, well, that's interesting. I look at it, but I don't think I'm going to trade it. So I think I'm still stick with my sentiment that we're going to finish the year higher. I think things are going to go well once we get through some of these uncertainties. I think we'll digest this economic data pretty quickly here. And we do have earnings that are going to still add more volatility, and the politics things, of course, it's going to switch. Trump's going to take the lead. And that's actually, I just showed one data point, and that was from predicted.org. Probably a better place to go. And it's really hard to find unbiased news here, but Real Clear Politics does a pretty good job of running right down the line. And depending on the odds you have here, Trump is still potentially in the lead. It really is going to come down to 7 states and 17 counties in those 7 states that really matter. And right now the spread is definitely in Trump's favor. So the predicted.org numbers change, and odds, you got to take odds with a grain of salt. I mean, it's the odds of Trump winning back in 2016 were 15. Trump won, and people said the odds were wrong. And that's like saying you can't roll the odds of rolling 2 on 2 dice, getting snake eyes, or rolling 12s. The odds of that happening is 1 in 36. So if it happens, do you say that the odds are wrong? No. So low probability things can happen. So this means, Harris can definitely win this election. This isn't over by a long shot, and there's going to be plenty of churn and plenty of back and forth, and it's going to affect markets. So we're going to see churn in the markets. Overall, I think there's plenty of reason to believe the Democrats, especially if it's close, have a lot of levers to dump liquidity into this market, and through a number of different vehicles that we talked about. And they don't want people going into the election with bad 401ks. That's the bottom line. That's
So
not going to do well for the incumbent.
I'm going to make my prediction right now for the election. Okay. So I think that Trump takes Nevada, which is one of those toss-up states. I think Trump takes Arizona. I think Trump takes Florida. I think that Kamala takes Minnesota and Wisconsin and Michigan and Pennsylvania.
What about North Carolina?
North Carolina goes to Trump.
Yep.
And Virginia goes to Kamala. And the one in Portland, Maine, that'll go to Kamala, and the other Maine, the northern Maine, will go to Trump. So Maine will be split. And what that means is we will be 269 to 269.
I know you've heard that before.
I know. And then the vice president or excuse me, then the Speaker of the House chooses, well, I shouldn't say the Speaker,
The
but
House
the
chooses the
House
president and the
chooses
Senate
the
chooses the
president
vice
and the Senate
president.
chooses the
So
vice
we
president.
end up with a Trump-Harris presidency.
Yeah.
That would just be glorious. That would be just so much fun. And Elon Musk says the most ironic outcome is, or the most humorous outcome is the one that normally happens because it's proof that we live in a simulation.
Yeah.
This year sure feels like a simulation. So it's crazy.
We live in an episode of The Simpsons, right?
The Simpsons or South Park.
Yeah. All right, my friend. It's good to talk to you. Glad you're back safe.
Yeah, thanks. Good to see everybody. Look forward to catching you later. Hopefully this is keep your heads calm, everybody. Things are gonna be okay. We're gonna get
Collar
through this.
trade. Collar trade.
Collar trade, and you just smile all the time.
Yeah.
All right, man. Good talking to you. I'll catch you later.
See ya.